What up, everyone? What up? What up? What up? What up? Give me a minute. My bad. All right. All right. How are we all doing, everyone? What up? How we doing? How we doing? We're going to scoot my little big camera over here, get more room for all the data we're going to be going through. Right. My bad. You can hear my thing. Evening. What is up, everyone? It's good to have you guys. Didn't get the notification, but still made it. How did you not get the notification? See, I don't see that. Oh, you have to turn the bell on. That's right. Don't forget you have to turn the bell on. Okay, this music's kind of ass, by the way. Hold on. All right, should we rock with some music here? Let's see here. All right. Sorry, I've been so busy all day. It's time for me to lock in. You know what I mean? I've done already a bunch of scanning, so spoiler alert, I do know quite a bit of what I'm gonna say and do. But for you guys, so you say ticker ACMR. So first of all, I'll get you since you're early. I don't know, man. Looks pretty garbage. So when I look at stocks, for those that don't know, when I come to conclusions this quick, number one, it's a cheap stock, which means technical principles. This is not a big market cap. Technical principles do not really matter as much with cheap stocks. And especially look at this. This stock does not move. Now you might think, well, wait a minute. These are big candles. But look at these ranges. They get eaten alive all day, every day. It just chops. This stock is not really that known for chopping. So unless if you have some flow or something to time it better, there's no point even trying. Even if you think it's bearish, even if you think it's bullish, your timing is going to be off and thus makes it a bad trade. Does that make sense to everyone? The most important thing with trading is timing. Okay. Way YouTube doesn't notify you're streaming. I think you guys have to have notifications on for that. I'm not sure though. But yeah, let me post this on my story real quick. Okay, hold on. We are live. Come join, baby. Okay, that was dramatic, wasn't it? Let me get a link and I'll post it on, we're gonna have about an hour stream tonight. Let me get a link to my YouTube live stream. So one of the biggest things, and we're gonna talk really in depth, so hopefully you guys came prepared. Type yes in chat if you're prepared. Type L Raider in chat if you came with absolutely no idea what's going on in the markets, because either way I'm going to fix that. So one of the biggest things, and we're going to talk really in depth. So I guess I could just tweet this out from how do we get the Discord? My bad, guys. All this prep, let me tell you, today has been insane. I've been absolutely everywhere. I just got back. I did like a 9-hour drive. Let me tell you, when I say I'm pooped, man. This is one of those days where it's taken a lot out of me to lock in here. But, you know, we did really well. So give me just 1 minute. I'll tweet this out, and then okay. So, what's up, guys? Yes, Andrew, we live, baby. I got the notification, but is it me or your volume a little low? Is my volume low? Mic check. Is my volume low? Let me know. Is it low? Is my volume low? Yes or no? Is my volume low? What's up, Toko? How are you? Indian markets, I'm ready. Let's go look at the Nifty. That thing's been on a rocket ship these last few months. Dude, what's going on with the Indian markets, bro? They're like literally screaming up. It's crazy. Okay. So, ladies and gentlemen, welcome to the markets. This is the stock markets, and tonight we are going to dive into not only what I'm seeing, what the future holds, but also more importantly, how you can make money from it. So everyone, sorry while I eat my yogurt, but we're going to chat a little bit about why the markets are doing what they're doing. And don't worry if you miss this, I am going to post a video tonight recapping all of this. I'm having my editor edit it right now. But for you lot in here that are wanting to get the raw experience, the raw thoughts, we're going to lock in. So specifically with SPY, there's one thing that I like to do when I first start my analysis, okay? When I first start to point myself in the right direction. A lot of you guys don't know quite where to start. So when I try to find trades, I try to look at where is the best pocket of the market for short and long. Why is that? We've talked about this in the past a lot, that there's two things you can waste in trading: money and time. The hardest and most painful one is losing time. If you're wasting time trading stocks that aren't moving, like RCM, if you're trading stocks that aren't having that big move, that don't have a potential for a big move, that don't have opportunity that's consistent in them, then what are you doing, right? So my goal as a trader is to find the stocks that are going to move the most with the most reliability, and the stocks that are going that have edge, that have data behind them. So when I start to find trade ideas, I'll always say this, but I start off the price charts first. Now, specifically with SPY and QQQ, I'm going to compare them because I already know this stuff already. But when I first kind of start in this process, one of the things I like to do is compare the major indices: QQQ, SPY, IWM, and the Dow Jones. These four major indices cover a very broad spread of the market. So you'll see a common theme. Every tool I use starts wide, and I get narrower and narrower to just one or two stocks. By the way, shout out Miss Kirsten. I made a bracelet that says Mustang on it. Shout out. Anyway, so that's where I'm going to start. So looking at SPY, you guys should already know this. But SPY right here, I'm going to drag this image down for you guys. Let me see here. I already made one of these charts, I think. Okay. So right here, this is a chart I have. Sorry if I'm not catching up in your comments. My bad, gang. I accidentally hit the buy. Much better. Okay, I'm all caught up. From last streams, that XOP flow was the money. Yeah, absolutely, Witchell. Thanks for locking in and reminding me of that. So as far as where I start, we have to first look at the indices, and this helps you craft a thesis. Remember, the whole point of why I'm going to toot my own little horn a little bit. The reason I'm good at trading is because I can craft really good thesis. Because I look at the data and I can calculate the probabilities of all this data together and make a very clear storyline. Okay? So we're going to review a bunch of trades that you and I and everyone else went over the last few weeks, but most importantly right here. So if we look at the major indices, what you'll notice is that we have SPY, IWM, QQQ, and the Dow Jones, okay? What do you notice? So type in chat, what do you guys notice as far as the performance of them? In chat, I want you to type 1, give, whatever. What do you guys notice? Just never mind. Don't type one. Do like, what do you notice about these 4 charts right here? Which one's lagging? Which one's leading? Which one's, let me know your thoughts in the chat, and I'll kind of get another bite of my yogurt. What do you guys see? By the way, how is the quality on the stream? Is the quality kind of grainy? Be honest for a second. Is the quality kind of grainy? Slight upward trend. Okay, we need to be more specific though. Remember, if we're comparing something, we have to compare. Okay, so maybe you're talking about SPY, but we have to compare different things. They move in a similar manner, but that's because they share a lot of common stock in each composite. Okay. So, okay, good quality, nice. Okay, so what you guys need to understand is that when I compare things, what we're looking at is relative strength. Whenever we compare something, all we care about is it setting new highs while the other isn't? What is the idea behind this? Because relatively stronger stocks are the better longs for a continuation. Relatively weaker stocks are the better long for a reversal. Remember us talking about that. Let me say that again. Relatively strong stocks, the stocks that are leading the market, are better for the continuation trade. Relatively weak stocks, the stocks that are lagging the market, are better for the reversal trade. So if the market's tanking and you want to get a reversal, buy the weaker names because they get the most aggressive buy up. Okay, so since we are in a continuation market, the names that have been ripping are IWM and the Dow Jones. These are clear outperformance. Whereas you have SPY kind of just doing its thing. It's kind of going up. And then you have QQQ completely lagging the markets. Notice how you did not make a new high. You're dropping while IWM, the Dow Jones, rocketing. SPY up here is making a new high, but it's very slow compared to the others. Do we see this? Quality fine. IWM and DI are leading the space. Nice. Small caps and defensives are leading tech. Yes. Getting some nice rotation into small caps, DI names. Overall, Mag 7, lagging tech. Awesome. So it sounds like you guys are exactly hitting these points. Mega caps are lagging. It's going to drag down tech. Microsoft, Google, these kind of names are selling off. Firms are taking money out of technology and they're putting them into other sectors. Remember last week how we talked about this right here? So let me show you guys this right here. My bad. Show you this. Yeah, Prath, that's absolutely right. You nailed it with that one. Okay. My bad. I gotta whip this out real quick. Okay. So you guys remember, I think on a live stream last week, we discussed this RRG chart, right? Maybe it was the week before. It was on the monthly. My bad. So on the monthly report, we discussed this RRG chart right here. This was posted, I forget, around July, I want to say late June, okay? And this was the rotation that we saw. This was a defensive and value rotation. So we had money coming out of technology, and then they were pouring it into the value and defensives names. This was a leading indicator. This was not behind the ball. I published this weeks in advance. This was a leading indicator, a leading idea to support this value and defensive rotation, which eventually turned into what we're going to talk about tonight, which is the rate sensitive trade. Okay. So that was what helped craft our thesis as to let's long small caps, let's long defensives. And even in my analysis of the Dow Jones, check this out. This is a really cool thing, and I think you guys can learn from this a lot, is that the Dow Jones, I want you guys to talk about, see this right here. So where do you guys notice the expected range is? The expected range is just below the high here. Okay, now that's intelligently placed. That's not by mistake. The options market was not believing that the Dow Jones would break out. And when we had data to counter that, we had a rotation to say, money's going to be pouring in here, and the options market doesn't agree, that's a sign that we need to long. Because if the options market doesn't believe it's going to happen, if they believe the ranges are going to be contracted, that is the reason you want to long, is because the options market priced in what happened, but it's not pricing in what's likely to happen next, right? These expected ranges are from prior values. These expected ranges are formed from previous ranges, and they were believing that there was going to be a contraction, but you always want to bet against the options market. So for example, in a stock with high IV, right, something like GameStop, which after 20 days of 20% moves, you get the juiced IV, right? And that means that IV means that you need more stock movement to get the same amount of gains, right? So instead of getting a $2 move and 100% on your contracts, you have to get a $10 move to get 100% on your contracts. When the options market starts to get really high and saying it's going to have these huge moves, you actually want to bet against that and say it's actually going to contract and get smaller in ranges, because that's how market makers basically win. That they make it harder to make money, and you need bigger moves. And what they actually do is they contract it. So not only are they winning on the premium side of decay, but they're also, winning within the physical contracts that they're all losing and not playing. So hopefully that makes sense. Let me see any chats. No. Okay. So that's that. So that was kind of the thesis. We said long industrials. We also said long energy. Energy was a really good one. OIH. This was one of my favorites for the month. This had a very strong seasonal into the end of July. And so what I wanted to do was long anything over 316. I thought that it would see a run up into the end of the month, and we would get some sort of support for that. We can see that again across, and this is going to be a trade we're going to talk about tonight, but this is the tool on the radar report. You guys can use this, but I'm only using it because I don't know if they let me use the other stuff. But the radar report right here, this is XLE, and you can see that there is typically a pop into the end of the month. So let's do last 15 years. You can see that there is typically a pop here into around late July from mid-July. This is what I was kind of betting on. Okay. So with that being said, where does that put us? Well, with the IWM and the Dow Jones leading, with the SPY and the QQQ falling behind, SPY being the second to last, QQQ being to the last, we have to ask ourselves, okay, why is that? Why is the IWM pumping? Why was that one of the big trades that we caught? Even industrials, these type of names. Why do you guys think? So let's see what you guys think in the chat. Why do you guys think IWM is pumping so much? Let's see how in tune with the market you guys are. Let's see. Drop down below in the comments what you guys think. Why do you guys think that the IWM is pumping so much? Sorry, someone sent me a very funny photo. Small caps are fat sensitive. Oh, rate sensitive. I read that as fat sensitive. Damn, which are we fat shaming? IWM positive seasonality rate. Shift in where the money is moving in the case away from tech. So, Ash, nice job. So you said rate cuts. A lot of you guys said rate cuts. Rate cuts. So let me get this idea across to you guys. The markets right now are pricing in rate cuts. The recent CPI was the first proof that the markets had that the Fed are actually doing something towards their goal, that their goal is actually achievable. So with that CPI, and we've been talking about this for a while now, with that CPI reading, the rate sensitive trade is in play. That we're not waiting for the run-ups. They're buying rate cuts, They're buying into the rate cuts. So all the rate sensitive stocks are going to be the trade over the next few weeks. All right. So what are those rate sensitive sectors? Well, let's go take a look. And I'll show you. So again, if you guys are wondering why is it the rate sensitive and what does that have to do with rate cuts? The Federal Reserve, the Fed, they have, of course, huge influence over the asset prices. And while it's not their goal to change asset prices, it's their goal to unemployment and, of course, tackle inflation. How they do that is a variety of different ways through monetary policy, but one of them is changing the federal funds rate. The higher the federal funds rate go, the harder they have a chokehold around the economy. The harder that money is to borrow, the more difficult it is to borrow. With them, in anticipation of cutting those rates, what benefits are going to be better in these less restrictive environments? It's going to be businesses that rely more on loans, that more on finances, more on that leverage part of the market, more on going on leverage. These are smaller cap names. These are names that benefit more with more money being easier to move, okay, at cheaper prices. So if we take these sectors and industries, my bad, I should have added the different sectors. 1 second, guys. Okay. Boom, boom. Okay. So if we look at this chart right here, I'm going to blow this up nice and big. Okay. So what do you guys notice are the top performing sectors? I took this from Friday. I took the performance from Friday all the way to now. Why Friday? Because that is when we saw a change in dynamic. We saw a pump off the market and it started to chop. Okay. So this was a change in dynamic. And so I'm going to do that. It was the day after CPI, I believe. So I think CPI was Thursday, right? Yeah. So with this, what do you guys notice? You see home builders, you see airlines, you see industrials, you see retail, financials, you see clean energy, you see TAN, all the way at the bottom, but this does not justify how good it's actually been performing. You see IBB or biotech, right? You see all of these rate sensitive names. So it's going to be found in solars, home builders, all of these things. Now, do I think this trade is slightly extended? Yes. Some of the trades that we took recently that I think a lot of you guys were on the stream when we were talking about this was home builders. So it was the URI. So this was the URI trade right here. If you guys remember this, there was a URI flow trade, and this was a bet on home builders. So when I see those two ideas match, and hopefully you guys kind of get where my brain's going with this, when I go and look at the flow now, which we're about to go do, you want to find stocks that relate to that thesis of that, well, if the markets are favoring rate-sensitive stocks, I need to look for rate-sensitive related stocks or trades on the option flow or wherever else I look for data, seasonal, things like that. Okay, so this URI trade was absolutely bananas. My contracts went from $3 to over $26 a piece. So this was the big payday on URI. Now, with it being so extended, I believe a contraction is going to come very, very soon. So we can expect some declines and then maybe a final leg within a few weeks, maybe 1 or 2 weeks after this Friday's expiration. People sold with large caps to put NVIDIA dumped. QQQ Tech is lagging. Sorry, I'm a little behind, guys. Blast Trades, what's up, man? How are you? Tech is lagging, not as much as SPY. I believe 8 out of 10 are also stocks. Yes. People sold dump. Okay, so do we have any questions over any of the information I've gone over so far? I'm kind of recapping you guys, getting you up to speed with what the markets are doing. Okay, so to summary, it's rate-sensitive stocks are in play, defensive in value, in a short trade in tech. That is basically the thesis, the overall market conditions right now. Are you guys happy with that? Do you guys understand all of that? For TradingView, so I don't use scanners on TradingView. I just use charting on TradingView. I just use charts. I don't think the screeners on TradingView are, I mean, they're good, but I have other ways of screening that's much more efficient. Bullish on Raider Trader. Wow. Oh, why? Thank you, miss. So do we have any questions up until this point right now? Are you guys good? Are you guys not good? What do you guys need summarized? So I just summarized the markets for you, and I got you up to speed with where we're at. All right. As of Tuesday, July 16th, the trade right now that is popping off is rate-sensitive stocks, defensive value. Okay. All sounds great. Okay. Cool. So you guys are up to speed with that. So again, while I was early to a lot of these opportunities, so we had URI, we had XBI. This is again rate sensitive. We also, excuse me, I have to adjust this. We had XBI. We also had the OIH trade. All of these guys, I believe, had some value behind them. Okay. Now, the next trades that I actually think have upside potential based off the conditions we are in is actually Reddit. Now, Reddit, I mean, if you look at this, Reddit, I had an idea last week on. Unfortunately, gapped down underneath of that buy dip zone, and I was not able to take an entry. But this right here, this strong recovery here, this is actually something I'm happy with. And to recap what this Reddit trade was, I will show it to you guys right here. So, RDDT, save the screener, out of the money, 626, value, white, save. Okay, so what this trade was right here was this. Now, when I saw this, my ears perked up. And do you guys know why? So let's see how good you guys have been listening to our little flow discussions here on the live streams. So this guy placed, I'll help you out. I'll do all the visual cues for you. This guy placed the trade right here on this day, okay? So let me move this over. Why do you guys think, what do you guys think this trade idea is? Bullish, bearish, what do you guys think? So the rate sensitive sector list is home builders, banks, etc. Yes, Witchell. So it's banks, energy, small caps, mid caps, Affirm, which again was the trade of the week. I'll show you guys that. That will be today's case study, okay? Or probably, yeah. We always like to do trade case studies if you guys are new here to review some of my previous trades and ones that we've talked about together. But I also want to do Boeing. So someone remind me by the end of the stream to do Boeing. Why do you mention NVIDIA as a semiconductor? Raider, your IG live story didn't show up push notification. What? There's no way, CDP. You serious? Let me go look at Instagram right now. Let me go look. Why do you mention, sorry, I have to get through these questions. Why do you mention NVIDIA as a semiconductor? Because it's one of the largest, if not the largest holding in every single semiconductor ETF. Raider, your IG live story didn't show up push notifications. Hedge order bullish, RDT is a hedge. Okay. So as far as what this order is, so check this out. And this is, again, option flow tells a story. And the story is sometimes simple, it's sometimes very challenging, and that's why it requires a very high skill ceiling for IQ. Because when you see this order, a lot of people go, bearish, bearish, bearish. Look how much he put on puts. It's not about how much he put on puts. It's about the behavior of it, because believe it or not, too many puts or how they place the puts could mean a bullish idea. So right here in this this Reddit, he placed 500, 500, 1,000, 593 contracts, various size. I'd guess if I just had to ballpark this, that's 2, 6, or 2, 4. That's about 7, almost $1 million. 2, 4, 7, yeah, almost $1 million in puts here on Reddit. But look how he placed these: 75, 74, 73, 73. Okay. And he got them all roughly on the same date and the same, the same location, which was about 75. So when the markets instantly reward him like this, he buys this at all-time highs here on Reddit, right? So almost at all-time highs. Right before all-time highs, he buys all of these. 75.50 is when he bought these. So roughly right here, okay? And all-time highs is all the way over there. So he buys these roughly at all-time highs. Why would he do that? It's because he's hedging. He's hedging a bigger position, something like that. And what we're worried about is not that bigger position. We're worried about how the market makers are going to react to this. This creates a huge imbalance for market makers, because what happened here was they dropped the stock. So now he's in the money. He's in the money by $3 or $4, and that's a problem. So by expiration, by 726, the incentive is to drag this above 76 and even maybe break this out with a lot of momentum. Because if he's spamming it like this, he's likely to create a bigger chain reaction and a bigger surge if it does come back to his strikes, because the market maker is going to buy. Okay. All right. Does that make sense, everyone? So I am still bullish on Reddit. I actually do have 726 calls that I picked up at close. If you guys are in the Discord, you guys knew that, but I picked these up with, I don't know if Zach took them, but the 726 I bought at close, right around close. It was about 30, 40 minutes before close during power hour. So I did buy these. It's like 6% up, but that's basically break even. So I'm looking for a continuation this tomorrow. Okay. So we're going to be watching that. Yeah, I found you on YouTube. The IG link doesn't work. When you say the IG link doesn't work, do you mean like when I push the live, like when I put the link in my live stream on my story? Sorry, I'm like new to this stuff. Now, okay, another trade idea that I was looking at was TDoc. Now, you guys might have, you might be seeing my stories once in a while, okay? Okay. This was TDoc. So Jason, one of the best strategies that I was taught was understanding the derivatives market. The derivatives market is the most influential market in the world. It is the most powerful market in the world. Not only because you have a direction, right? But you also have a timing. People say timing the market is impossible. It's absolutely very doable. And if you get good at timing, what's the best way to get good at timing is understanding the options market. Many people, Jason, don't know that market makers have to do certain things with certain orders. You and I can both agree. A noob, someone new to trading would agree that you cannot go place $1 billion worth of calls on snow. It's impossible. You can't do it. So if we scale that exaggerated idea back down to a micro level, there's multiple different reactions that market makers have to certain orders, whether it's call or put. Some put orders create bullish reactions. Some call orders create bearish reactions. Some call orders create bullish reactions, and vice versa. So each order can go either way depending on the criteria that they are. If they're a hedge order, you trade against it. If they're a discount or tag trade, you trade with it. And that is because market makers have very predictable reactions. Now, the next thing we're going to do, now, TDoc was the one I posted on my story. You guys should have logged that, but you guys don't understand. You guys do, I'm trolling. But who remembers in chat? Let's hear who remembers in chat. Who remembers our Boeing idea? Who here in chat can remember what I said about Boeing? Okay, let's see if you guys are going to cook. Let's see if you guys are going to cook, or let's see if you're going to serve a soggy dish. Now, extract, I'm going to call you abstract, which is what you tried to spell, but you didn't pass kindergarten with the gamer language. Who here remembers my idea on Boeing? Let's see who can cook, and I'll get the flow idea right here. And here's a hint, if you guys don't remember, this was the flow idea that we saw. Who here remembers our idea on Boeing? Let him cook now. BA at 187. Okay, that was, now, boss, that was part of it, but we actually did have a change of idea because of this flow that came in on the 9th. So this flow came in right here. Ban. What do you guys remember that happened with this flow order here? Well, I'll tell you what happened. Well, actually, I don't want to tell you what happened. You guys have to guess. Whoever here remembers this flow order, we'll see. I'll give it a few seconds. See if anyone recalls it, because this is important. I remember there being a liquidation on BA. Okay, so Witchell, you're on the right track. So with this floater right here, and Jason, this is where being understanding option flow. Again, this is not my only strategy. It's important to have a perspective on the markets. If you understand how the market works, you'll have a variety of different strategies that will always work during some time. Option flow doesn't work in some times as better as it does in other times, and that goes with every perspective I have, but always during some time, one of my strategies works, and that's the important thing about building a perspective. When you were talking with Sean, oh, awesome, man. I'm glad you're here, Unique. Those guys are awesome. Love them. I've been friends with them for a while now. So as far as this BA order right here, what you saw come in, and again, I don't want you guys to think that option flow, okay, first of all, for everyone new to option flow is not, let me go follow the big money. Big money is not smart money. Okay, let me say this again. This is going to be a quote. You're going to write it down. Abstract's going to put it on the poster above his wall. He's going to go, Raider made me a mod. Let's quote him. So this quote, okay, changes your perspective. Big money is not smart money. Smart money is sneaky money. Okay? Big money is not smart. A lot of you guys have this idea that firms are smart, when in reality, a lot of firms placed forced trades because of their system. They're robots placing these trades to manage the risk of this portfolio automatically. And these trades have consequences. Okay? These trades have great consequences. They're not someone who knows more than you. You're not following someone who has inside information. That's not a thing. Okay? Now, some trades we follow because the idea is so intelligent. But again, there is, if I can make it make sense, it's that option flow has predictable reactions because a lot of these orders, 90% of them that we find are forced orders. They're not placed because they want to, they're placed because they have to, and they have a predictable reaction. Okay? So with this BA order right here, on 7/8, we saw this come in. 7/19, 182.5 calls. So he bought this right here on this day. Instantly after buying, he was rewarded. So you can see he bought at 188.46. As soon as he bought right here, the stock tanked in his favor. Okay? But this met the criteria of a hedge order. We bet against hedge orders. Okay? But since he was rewarded instantly, it tells us that the market makers are going to offer a dip buy opportunity, because when hedge orders go in the money, it creates an imbalance and you actually want to trade against it, because market makers' job is to balance the market. And whenever something's imbalanced, it's going to try to correct it. They are going to try to correct it, okay? These market makers are not greedy bastards trying to hunt your stop losses. I promise your $20 trade is nothing they're worried about, okay? Okay, that sounded a little mean. But I promise that your position size is not something they care about, all right? It's these type of orders that create major imbalances. And 300K that expires this Friday is not a cheap amount on Boeing. Is not a cheap amount on Boeing. Okay? That's a lot of money. And you guys think, well, 300K is not that much. But you have to remember, it's 1,900 contracts of 100 shares of the stock. So if we do the math for that, that's 1979 times 100, which is, again, how many shares per that. And then times the stock price of Boeing, which is 180, let's just say 182.5, 182. That's potentially, what is that? $36 million in equity if he exercised. Okay, now again, these are puts, so he'd be selling. But does that make sense to everyone? So it's implied. The market makers still have to make a move off of it. So what do? So the market drops, it liquidates. And we said that we wanted to see something off of 179, right? Or 180. But for sure, anything you wanted to see Boeing liquidated. We talk about you need to see Boeing liquidate from this range right here, because that's going to loosen up this constriction. Okay, so we had a Boeing liquidation. As soon as Boeing liquidated, you saw a massive rally, and then we go ahead and we play the 726 calls. So because this was the bigger and closer expiration, we said down now, and then buy the dip because it will slingshot back up, and then you can play that continuation for 726. So Boeing is a bullish trade. I believe they will get a run up into earnings, which is in August. It is 2 weeks from earnings, roughly, about a week and 2 weeks from earnings, roughly, and typically 2 weeks ahead of earnings, you actually get a run up. Okay, this is called the earnings run up. You see a big boost in stock price before the earnings because of the anticipation. Now, you guys might hear a lot of news about Boeing. Understand that Boeing already has had a lot of that news priced in. Okay, so their earnings, everything is probably priced in. So if they get anything somewhat decent of guidance, they're going to rock it. Absolutely rock it. Okay, now I'm not concerned about that. I'm just worried about the run up into Boeing, which is all I care about, because ultimately earnings is a gamble. Who placed the original market maker or institution? The 719 trade, I mean, they could be either one, but you have to understand that CDP, understand that institutions are not really smart. So this idea that institutions are out there making hundreds of millions off your orders, hunting your stops, and it's not real. I know a lot of, when I was in the Bay Area, a lot of my mentors and everything, I was exposed to a lot of institutional trading, and it's not, these guys are very, like, a lot of them are actually like just job 9-to-5 workers that show up. They have a sheet of paper on their desk. They come to their desk and they say, execute this order, execute this order, execute this order. They're told what to do. Most of that is online now, algorithmically, but they still do this manually through people with license, like the series, whatever, and whatnot. So it is not actually, whether who it was, we don't care. What matters is that the order meets certain criteria that causes reactions, whether it be from the market or the institution. Okay. Jason says, love it. Damn, this is great. Hey, man. Thanks for showing up. Okay, so that's the Boeing trade. So bullish on Boeing. Those were the two flow that I'm still watching. As far as, everything else kind of played out. I'm not going to flex on you guys, but I'll show you a few of these trade ideas. So the first one that worked out was this INTC was interesting. So check this out. This is probably a bearish trade. Actually, we'll look at that one later. But here's an example of, without cheating, guys, let's see who here remembers, what is this order right here? Is this a hedge order, or is this a directional trade? What do you guys think? Let's see what you guys think. So he placed the puts right here, okay, on this day. What do you guys think this is? Is this a bullish or bearish trade for us? Even though it's a put, again, just because it's put, we don't follow. Thanks for your insights. I have always wondered why large to huge positions open up against the trend. I could not imagine that these people have no idea or are greedy. Right. So Toko, 100%, man. So a lot of the times you'll see huge positions opened up, not because they want to, but because they have to. Remember, some of these firms are managing 3-4 billion. And the only way to manage some of their delta exposure, some of their directional exposure, is they have to, again, remember, institutional management is not about making the most money on return. It's about pleasing their clients and making it look like they're doing something. So when you call your money manager, they're charging you a fee, and to justify that fee, they're trying to do stuff with your money. So they're more than happy to go place these huge hedge orders to say that they're hedging your risk or that they're managing your risk better than other institutions. It's like a kind of incentive. And a lot of the guys I've talked to, they were big into this. They would hedge bonds and stuff like that. And they don't do it because they want to. They could just hold money, but they do it because they have to. It's part of their risk management and things like that. And again, they could lose 100% of that trade. They don't care, but they're still going to open it up, and it still has consequences. Hedge order, hedge due to the amount of So this is absolutely a hedge order with how he placed it. It's starting to break out. Why would you place this big of a put with this many contracts right here? It's because you're hedging a breakout. And so XBI, if you guys notice, he placed it right here. What's intelligent about this order is this was where the previous short level was. So look at this. So everyone shorted right here, and then we dumped, okay? So when you come back over to that level, this is where exactly this guy hedged. So he's hedging a position that he was either building down here, whatever. Who cares? Who cares what he's hedging? But the idea is that he's hedging here because he believes the breakout is coming, okay? So that is the idea behind this XBI trade that we did well on. Okay. So this was just a basic basic thing. Sorry, I got a notification. All right, so if we're going to go look at current flow, we might as well do it now. I've already looked a little bit, but I didn't see anything. We can try to find some. So we'll look at flow from today and yesterday because I did not look yesterday. Yesterday flow sweep only 726. Okay. GME carry. Now this was interesting as well. So there was a few orders placed on KRE. So check this out. So KRE obviously has been going nuclear. This is rate sensitive as well. And again, this trade I would have never. I mean, this is just ridiculous. I've never seen something. I mean, that's just crazy. But this KRE order right here. Hold on, I'm gonna read that in a second. So this guy right here, he bought 715 and he got the 719 contracts. Now, this guy is in the money by a large amount. But these are technically not hedge trades. I mean, they are, but they're not. So this guy, honestly, I think if KRE starts to slow down, you could see a dump below 55 because he got 719. But again, there's so much momentum. This is going to be a tricky trade. But the bias is that because he built this wall at 55, 53.5 is definitely probably not within expectations all the way down here. So we're not going to worry about that. But I believe that KRE by 719 should see under 55 because they don't want to close it above this and pay that many contracts out. Okay. So definitely hold a bearish bias on KRE. I think some of these names are extended just a bit, but remember, you have to respect momentum. If we gap up tomorrow, do not short this unless if it shows weakness off the open and actually starts to move during lunch. Okay. So he says, be calling me for real. I ain't his money manager, but I'm pretty cool. I got so much to learn from Raider Trader. Hey, Unique, man. I'm glad you're here, bro. You do have a lot to learn. I was blessed enough to, I'm not self-taught. And let me tell you, from a young kid who wanted to learn a lot, I've been that journey, and I'm still on that journey of just having fun. And of course I learn something every day. My mentors, they drilled into me through my entire high school. I'm almost 21 now, but even from freshman year to senior year, I would just go to them, mentor. I just wanted to learn all I could. So I spent my entire high school just learning this stuff. And even beyond high school, this is what I'm doing. So some people say it's a dream for them. I say it's a reality that I'm trying to make into a bigger dream. Something, I always hear that saying, I want to live my dream, but then you forget, your dream is your reality, and it's not something you just think about. It's something you can do. And if you're living with, I don't even know what I'm saying, but you get what I mean. Like, you don't just have to think it's far away. It's very close and very achievable. But anyway, so that's that. Now, that's KRE again. Could be something in there. Could be not be something in there. I don't think there's much else here. Ooh, wait a minute. Interesting. So, do you guys see this unity? So this is a hedge order as well. So with earnings coming up, and I told you guys this, around 2 weeks before earnings. If earnings is on the 8th, 2 weeks before would be around this. You typically get a run up. Okay. So this order right here is for 726. He got the $17 strike. This is a hedge. So because he placed a hedge right here, and he got this yesterday, he built the support for this stock. Do you see how the markets instantly reacted off his strike? He's building the support for the stock. Now, where you have to be very patient is you can't rush into this right away. But what I will say is you have to be bullish on Unity. Unity is a rate sensitive name. It is one of those names that's going to be beneficial. It's going to benefit heavily from the run up in these. So I believe, this is my big brain thinking, since we've already had such a big run up in IWM and these names, you can expect a consolidation maybe into the end of the week and early next week. And then you'll see a final leg. And that final leg, that C leg, out of that contraction from this expansion will benefit these names the most. Unity, these kind of guys. So I would be watching Unity, earnings run up, be bullish on Unity. This order right here kind of confirms that we have set a bottom. Now, for all my gangsters in the chat, let's see if Abstract can remember. When we look for a technical bottom, what do we look for? What do you think? So I'll give you a hint. There's two bottoms. There's two bottoms in every bottom. Okay? What do you guys think those bottoms are? Liquidation, was it? Kuwani, are you able to chat right now? Should I call you guys? Okay. Just to understand, if they hedge a position, it means they think the opposite will happen. If they buy a hedge, it calls they think it will drop. If they hedge with puts because they think it will go up, yes. Well, it's not also what they think as well. It's also the response from it. When you place a hedge order, it creates a big liability for market makers, and they're forced to move it against it. They're forced to. But majority of the times, these orders are placed intelligently at pivot levels, which force the market makers to move. Kuwani, are you? So Kuwani just is not alive. I'm live, by the way, Oscar, so you don't have to talk if you don't want to. Liquidation and technical, liquidity, right? Okay, so abstract. In a bottom, there's always two bottoms, okay? There's the liquidation bottom, and then there's the technical bottom. So the technical bottom is where everyone buys, right here, boom. Okay? It could have been this too. We can look at volume. Okay, so it seems to be it was like this, okay? So everyone buys here, and then the liquidation bottom goes, and it violates that low, and it has an instant change in market dynamic. It's the V-shaped reversal. This is the climax of selling. This is where everyone buys. They liquidate them. This is the climax. It's the final push of the sellers, and then you get an uncontested move to the upside. If you don't believe me, Raider, you're so stupid, Raider. Raider, you don't know what you're talking about. Raider, I don't think you know what you're doing, Raider. Raider. Shut up. Technical bottom right here. This is where everyone buys. Then you go for the liquidation bottom. Liquidation bottom violates that. Always move up. Okay. Raider, you got lucky with that one. Okay. Did I? Technical bottom. Everyone buys here. Big response. Come down. Liquidate. Instant change. Okay. Raider, you're just getting lucky, Raider. Okay. Technical bottom. Up. Liquidation bottom, V-shaped reversal, never violates the low. Up, boom. Raider, wait a minute. You're getting pretty lucky here. Technical bottom, response, down, liquidation, boom. Raider, what the hell, man? Wait, you're going actually back to back. You're popping off. Yeah, I know I'm popping off. Technical bottom. I mean, there's, you know how technical theory works, but technical bottom, pop, liquidation up, but this is a bigger technical bottom, and then this is the liquidation down here. Okay, so are we all clear on that? Do you guys understand the point with that? So that's Unity. It matches the description. So be bullish on Unity. Again, this is going to be an earnings run-up trade. So maybe not this week. Maybe this week you get a 726 entry. I would say any gap up, we can plan this trade out a little better, a little more professionally. But the idea here would be quite simple. It's going to be this right here. Boom. This right here is going to be your first target. I would say entry, if it does dip, would be a liquid. I mean, this seems like it already liquidated. So it'd be really entry now. And then if you get violated enough, any entry under 17 into the end of the week would be a good entry. So if we dip under 17 to the end of the week, that would be a good entry. But honestly, I would say 726 now to play the run up. Okay. Raider, you're so stupid. You know what you're talking about. This is all luck. Wow. Abstract. Thank you for repeating. I think, actually, mods ban him. Wait, he is a mod. Wait. Why did I make him a mod? He's such a normie. Thoughts on NVAX? I'm bullish on healthcare, but NVAX, I mean, damn, dude. If you're trading options, I would say hell no. If you're trading equity, maybe go for the gamble, but I'm gonna be honest, bro. Like, trading things like this, it's just, it's kind of hell. You need a massive move to make any money. I think something better would maybe even be like, I don't know, PFE for the breakout, something like that. This is forming a way better base than, and you can see that same principle applies. Technical bottom. Well, I guess this would have been the technical bottom, and then you liquidate. But you had the change in dynamic here. So, I mean, it's just forming a really good base. Its volume's increasing. You can see that volume increasing. So, it's, I mean, PFE's one, Moderna's one. Kuwani, are you talking right now?
Letting you talk.
Oh, you just being silent?
Yeah, I'm just mysterious like that, you know?
I was watching your upgrade video. Just join back to the live. What stock is that? You were watching my upgrade video. Oh. Okay, well, I hope you enjoyed that. On what time frame do you use your bottom strat? Listen, man. Toko, and this goes with everyone in chat. Time frames, I always get best. What's the best time frame? What's the best time frame? You have to understand, time frames are relative to the trade idea that you're trying to trade. If I want to take a trade that's 2 years long, I'm not going to be looking at the 1 hour chart. Okay. So with that in mind, I can't tell you unless if you tell me what trade idea you're looking for. If you're looking for I mean, I can show you on the hourly. It works on all time frames, but the accuracy of it, of course, smaller time frames require smaller targets, smaller and quicker ideas. So you can't go and say, you know, oh, I need a technical bottom on the 2 minute time frame because, you know, you're not going to see it every time. So what theme does always stick with everything is a liquidation. So if you get a liquidation, it happens on all time frames. Liquidation, boom, last hurrah, and then you get the instant thing. Lorena, that is the RRG chart. So this can be found if you guys have Bloomberg Terminal, but I just prefer to use the stock charts version of it right here. And in the Discord as well, we have a ticker list. So in the Discord, we have a ticker list. Where is it? It's under the tools link. So we have a ticker list that you can scan all the RG tickers. So you just copy and paste. So if you want to scan like jets or airlines, you just come here and then you copy and paste and you can scan the jets. So it's super easy. But this tool, yeah, it's just like $20 a month or something. I mean, I pay for all this data, so it's whatever. But yeah, you can find it on stock charts, Bloomberg Terminal, one of the two. How are you planning on playing these trades out with FOMC coming up end of July? So abstract, there's one major thing that I always say. People, if you worry about data too much, like, you're going to give yourself a headache. Don't worry about data so much. Worry about the run up into this data. You can always just trim positions to lighten them up, but majority of the time, if you're in individual stocks and not indices, you'll be fine. But as far as with the FOMC, again, we're just playing the rate sensitive names. We're looking to continuation in them, maybe a sell off into the end of the week, because I don't know if you guys knew, but there's major call walls at 562 and 560. Major call walls on SPY here. Sorry, I should have adjusted this. Major call walls on SPY here at 562 and 560. it's likely that the markets go and close under at least 562 or 560. Again, we can see this on this. Raider email leaks. So right here. So 562 and 560. Now you can see that we've closed beyond that final call wall. And what do you guys notice? There is a slight imbalance. There's literally no puts in the money, which is a problem. If you're a market maker and you want somewhat of a balance, it's likely that you want to push it back down to 562. Okay. So that would be my bet, is that they push it down. But on the other hand, if you guys want to know who screwed up everything today, it was this guy right here. Okay. So this guy in SMH placed almost $1.5 million on puts that were within expectations of SMH. So honestly, there might be a bullish trade on SMH here this week. But this one is going to be a continuation trade. My favorite picks are going to be ARM. I believe ARM is going to get a pop. I know I said don't long technology, but you know, if it's there, it's there. Yeah, I can't hold on to that idea forever. But this guy right here, he placed a massive hedge order, massive on SMH. So shorting this is probably not the best. I think upside move in semiconductors could be. So we could go both ways, but the bias is that 562 close under that this week. With how big of a puts this guy placed, it's a massive hedge order. You could see a rally in the semiconductors at least. Do you trade futures using flow as well? So no, I don't. I trade strictly options, but if you are a futures trader, you still can get ideas, because if you're trading NQ, you're trading the, ES, whatever, you can still get ideas from flow. One of them, of course, being that VIX call we saw forever ago that kind of predicted the markets going up. So I don't know if Jason, you're still in here, but forever ago, there was a trade idea that we talked about, back when I used to post watch list videos. I still do, I'm still doing that. I'm going to post one tonight, but there was this VIX call right here. How's it going, traders and investors? My name is Andrew Rader. So this right here, this order was a VIX call order, and this guy right here, he placed it 419, and it's VIX 621 expiration, so it's pretty aggressive. It's 2 months, but it's 16 million. And so you go and you look at this and go, bullish, 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 bullish. Oh my God, the market's going to drop. Of course, if you're bullish on the VIX, that means, options premium get more expensive, which means markets likely drop. So with that being said, the only fatal flaw was that he got the 26 strike. Now, not a lot of people have the IQ to understand that, not to hate on them, but they truly just don't have it. But my mentors have, again, they've drilled me into this professional curriculum, and that understanding that, well, he got the 26 strike. At the time of 419.23, if we go look at the VIX, okay, at 419.23, which January, February, March, April, which was April, right here, this guy bought it right here, and he bought the 26 strike. He bought at the major rejection point of VIX. So typically VIX rejects off 26, 28, 32, okay, or 32 and whatever. It changes year to year. But as far as this right here, 26. Now, if he actually thought the markets were going to dump, he would not have gotten the 26 strike. Now, you're probably asking, Raider, well, wait a minute. If you can't buy shares of the VIX, how do the market makers reverse it? Because the VIX is a measurement of options premium, and when the options premium gets to 28, typically it reverses because it hits a deviation. It hits a level that is too far expensive that no one's willing to participate in hedging anymore. So that's that. Now, with that being said, he got the 26. So this one order right here is the whole reason we were bullish for the next few months. Just one order. If you missed it, you missed it. But this one order, and I'll show you this. He got this 419 expiring 621, and you're going to laugh when you see this. So he bought this on the 19th. So look at this. He bought this on the 19th, right here. and instantly he dropped. But look at this. He bought for like July 16th, I think. He bought for June 21st. So look at what they did. This is hilarious. They literally ran the stock up all the way until he expired. Just clapped his cheeks. Just absolutely brutalized him. So that one order basically built the bottom for the market. It was the thesis of, hey, this is gonna actually go up. And bro actually spent 16 million to get liquidated. What's up, young man? How are you, James? Hope you're doing well, bro. SMH looks solid. Yeah, it does. But again, the issue is going to be with timing. Do they liquidate it first and then you play the dip buy trade? That's what I'm wondering. So maybe 1 or 2 more days in bearish, but I think either way, the buy the dip trade in semis or buy the gap up is going to be the play. If we gap up tomorrow, I'm going to take ARM long. No problem. I think ARM is going to be the big mover. ARM. Damn, they said hold my beer. For real. And this is the power of options, man. It's only 1 or 2 orders that you need to build an entire thesis, depending on the importance of that order. So that's that. But anyway, guys, so as far as all the trades put together, I'd say definitely keep watching Solars. One of my favorites, now we haven't talked about this, is actually ENPH. Again, with how earnings works, guys, you almost always see earnings run up in these names, so you can expect more bullishness in this. It's contracting. Does it liquidate here? Whatever. But I think ultimately the buy the dip trade again is going to be the better one in ENPH. This is a rate sensitive stock. And I think ENPH is going to offer the better opportunity than FSLR, given that the earnings is closer. So ENPH's earnings are the 23rd, and FSLR is the 30th. So I'm actually going to play ENPH. I might swing this through earnings, but I'm going to grab 726 for now and just reevaluate that. So that's ENPH bullish. We have a BA bullish trade, and we also have an RDDT bullish trade. Now, as far as to the downside, I'm still liking the mega caps. I mean, we've called them the lag 7. If you guys have seen me on Trader TV, that's when I announced they're the lag 7. Of course, the joke is that they're called the mag 7, but I said that they were going to lag the S&P, which I wasn't entirely wrong on. They absolutely did. I mean, Netflix, Meta, shit the bed, all these guys. But yeah, so definitely check that out. But I think playing a continuation. Oh, actually, that has earnings. Maybe not Microsoft, but something like Meta, definitely, which has 31st earnings. Maybe see a pop, get another short, like that. But the idea is, again, the thesis is to continue to short technology if you want a downside trade. Now, the tricky part, again, is timing. It's so tough to try to time this week, but I think just wait for the gap up on semis. If semis presents along, just stick to semis. Don't worry about all the other technology names, but the names we talked about. Carvana, CVNA. So this one, I think the opportunity is too far gone. If you are wondering about that south gate, the squeeze trade was actually back here. There was a flow trade, so I'll show you this. This was June 17th, so mid-June. Let me show you this. There was a flow trade that we actually took on this and traded. So this was... I think he got it the 10th. So CVNA. A hedge order necessarily. This was actually bullish trade. So he got this on 617, which was right here, came up, chopped, and this was, since it is Carvana, there are exceptions to certain things, but this one right here, 123 strike, this was the bullish idea. So your entry was actually right here on the chop, and then of course playing that 628, which we did play 628. I've since expired. I think I took profits on the 26th, 2 days before expiration, and it went up more. Who cares? But this second leg here is kind of disastrous. You don't want to be involved, especially with earnings down the pipeline. I'm gonna avoid that. But the trade was back then. Oh, I'm not even showing it. My bad. So I sold right here. I would not touch this moving forward. So market makers won't look at cheap money like $20 options, but if it's in the millions and they can clap them. So unique, it's all about market cap, things like that. Penny stocks, you don't see very many options activity on them because the spreads are so bad. Now I've gone, if you want to go watch my option flow videos and stuff like that, you can go maybe get some hints at that. But the cheap stocks, the penny stocks, these type of names we just don't look at because number one, the options have incredibly wide spreads, which makes it incredibly hard to trade. So we don't want to follow anyone doing that. But also we want to see names that are not too big. Like flow on Tesla is meaningless because it's the highest derivative traded in the world. So if I show you right now the options chains, if I show you this right here, and we go to something like Tesla, and we just show all strikes. Okay, check this out. Okay, so if you look at this, the open interest on some of these strikes, 43,000 open interest, but only 5,000 OI. Okay, so there is 8 times as much volume as there is open interest. What's that tell you? Whether those are new positions or not, it tells you that these names are not held; they're day traded. And so, why would flow matter if it's just day trading, being constantly bought and sold? We can't keep up with that. So therefore, it's irrelevant. Flow on Tesla is irrelevant because it's meaningless. It's spammed by institutions trying to balance different positions. Absolutely meaningless. So when it comes to Tesla, things of this nature, Tesla, Nvidia, these names don't matter when it comes to flow. You'll see a lot of guys post online, look at this Nvidia flow, look at this Tesla flow. They're absolute jokers. They don't know what they're talking about. And sadly, even the company that does the flow, Blackbox, their alerts that they post on this website are dookie doos. They're horrible. They're not high edge flow trades, and they're not stuff that actually has edge, in my opinion. So that's kind of that. Now, cheap stocks, there are cheap stocks like Ford, which have good flow on them, of course, but you know, it's not all about price. It's mainly about market cap. Why do you have favor stock markets over crypto? I would be interested in the most important points to you. So the difference between stock markets and crypto, stock market is more predictable and you have more of a chance in it. Crypto, now I say that and people get angry, but it's true. Crypto is heavily reliant. There's not as much tools. There's not as much ability to time markets like there is with derivatives markets. The derivative market, the options market of crypto is horrible. And even if you traded crypto, you can still get crypto exposure in the stock market. And if you wanted an opportunity in crypto, you could trade something like Coin. You could trade something like Mara. You could trade something like MSTR. These type of names right here all can give you decent. So if I wanted to take a trade in Bitcoin, recently I actually did trade Ethereum long. So we've been long Ethereum. And we got about, I don't know, 12% out of this, but 9%. But the idea is that with crypto, there's so many other factors that are not obtainable and not easily broken down compared to the stock market. And I think the stock market has more of a foundation for success. There's more people succeeding in the stock market, and that is due to more money being in it. That's due to it being more widespread, more ingrained, more researched, more tools around it, of that nature. Miners up big last 2 days. Absolutely, James. These things have been absolutely killing it, moving along with crypto. So let me get this. So I'm looking at Netflix for earnings. I think it's overbought. Netflix. Again, man, earnings is an absolute gamble. I would say to you that if you want to find stocks to trade right now, the stocks that are heavily shorted, like TDOC, are going to be the big movers on earnings. So I believe that I'm going to buy calls. I'm, gamble. If you guys are traders, each earnings season, it's probably worth just sitting on your hands for a bit. But you need to just have a little bit of capital that you're willing to trade. Earnings is ultimately a gamble. You don't want to trade stocks that are expected to have too big of a move because that makes it very hard to actually make money, right? If a stock's expecting a 30% move, don't trade it for earnings, right? Because you're not going to make any money unless if it goes 30% or more. Trade the names that are expecting like 3-4%. And so a trade a while ago, I don't know if you guys remember, but Google was only expecting in April earnings, Google was only expecting, I think, like 4-6%. And because we traded this one, we thought it could beat it. I think this was a 915. So it went actually double that, and that's 1,000%. So because you were a part of the move that moved, you got way more rewarded. So for that, I'd say that if you want to trade those kind of names, just don't trade the humongous ones. So if I'm looking at SoFi night for the two bottoms, it looks like someone ran it up in the ninth and the bottom, and the liquidation bottom is coming. They might 9-ish. So SoFi, again, this is one that technical principles are kind of hard to apply to. Again, very cheap, lower market cap. But when it comes to SoFi, it just makes, I mean, this stock likes to chop. Again, with those smaller market cap stocks, the technical principles get less validation. So with this one, this is just simply, boosted with, again, the rate sensitive trade, but also anticipation of earnings. So small caps, mid caps, these names get really, really boosted ahead of the rate cuts. Okay, so with that being said, guys, we're gonna move on to now. I'll let you guys vote. So I think I can throw up a poll in chat. Okay, so let me see if I can do a poll here. Start a poll. Do you want a lesson or case study? So a case study is where we look at one of my previous trades, and a lesson is just where we do like a raw lesson. Okay, so you guys can vote in chat. I'll give it a few seconds. Kwani, are you gonna talk?
And you do all the talking.
I mean, give me a break, man. Let me get my vocal cords back down.
You're the main man.
So you guys can run that poll up, whatever you guys choose. You don't use volume for your trades? I do, but volume nowadays, Ryan, does not matter as much as it used to. And I'll tell you why. Volume is somewhat scuffed. How do I say this? In 2024, with the activity of the derivatives market, volume can somewhat lie. Back when options weren't as popular, it was more influential. But now options are actually moving equity markets, and volume is losing more importance. Of course, with market bottoms on the macro, you do want to see increasing volume. For something to move, you want to see either very little volume or very high volume, like an inside day paired with a very low volume day, or an inside day paired with a very high volume day. But am I looking at it from hour to hour to see big volume candles? No. But sometimes it does come up, absolutely. Any books on derivatives to learn? So Unique, I would say this. A lot of people want to study books, and they think that books have more knowledge than the internet. The more efficient way to learn and the faster way to learn and the better way to learn is actually on the internet. So we have a ton of resources on derivatives, PDFs, recordings, videos with my mentor, Zach, and I. And we do a lot of that stuff. If you want to join the Discord, you can. But I would say, bro, books are a waste of money nowadays. The people writing them don't really... I don't want to say they don't know what they're talking about, but when it comes to a topic that complex, no one's writing a book about it with the best intentions and the most feedback that you can get, right? So that's why you look for a live service, maybe a group, our group, whatever, or even the Radar Report. I talk about it a lot on there. All right, so you guys have 13 votes. Let's see which one won. So you guys had less than 69%. Okay, cool. So now you guys have to vote for your lesson, and you guys can type it in chat, and I'll write your lesson options here. This will not be one. We'll do first one, lesson on momentum. This is your first option. Don't type yet. Then you have lesson on, let's do reversals. Then you have a lesson on seasonals, or we could do a lesson on entry exit. Okay, so you guys can type down in the chat which lesson you guys want to have. Took me a few months to realize. Oh my god, SPY no longer plays off of volume for 2024. Yeah, Jake. So volume is kind of tough. You guys have to remember that things like SPY, they're hedging instruments. And therefore, the volume is going to be somewhat scuffed. So the indices are used a lot for hedging. They're not always a good tell of what's going to happen next. Reversals, momentum, exit entry. Where's the lesson on how to talk to women? Abstract, so that's in my OnlyFans, if you want to buy that. I'm joking. Momentum, entry, exit. So we have 1 reversal, 2 reversal, 3 reversal. We have 3 momentum. We have 3 exit. Damn, you guys are really making this hard. Check Starbucks. You want Starbucks. I would be bullish on Starbucks, but don't chase it. You only have a few days till earnings next week. I think the better trade will be next week. But this pump definitely warrants a continuation, but I think it's going to chop out first a little bit. I think it's going to happen. Do the votes, bro? All right, I got you. How do I end poll? Okay, there we go. Here we go, guys. Start a poll. We're going to do momentum. We're going to do seasonal. Actually, you guys didn't even want that. We're going to do momentum, exit, / entry, or the final option that you guys wanted was
Talking to women.
Talking to women, or scene rater twerk. Okay, here we go. What was the other option? Wasn't there 4 options? Oh yeah. So mods, ban anyone who votes for the third one, please. So who voted for scene raider twerk? All right, we have some interesting characters in here, don't we? Scene raider twerk, 8%. It was impulse. Dang, you need therapy. If that was an impulse, that's a deeper mind-rooted problem right there. He didn't even choose to do that. His body just... Okay, so you guys chose entry and exit. Okay. Let's do it. Financial Queen not going for it. Yeah. Imagine. All right, guys. So your entry on exits and entries tonight, we're going to talk about a little bit of rules. We're going to talk about my entry system that I typically deploy. A little bit of everything. Okay, so first of all, let's talk about how you enter a stock. Okay, now, before I even enter, so we're going to talk about entry, we're going to talk about management, and then we're going to talk about the final step, which is exit, of course. How do you exit? Okay, so why did I just type text? So how do you exit? Okay, so before you even enter, right over here, before you even get to this system right here, I want you guys to understand that you have to find a trade idea outside the price charts. Now, when I say this, a lot of people get mad. Raider, what the hell do you mean? Why would you, what? Aren't the price chart, isn't price action king? Guys, whoever tells you, and don't, I say this respectfully, okay? I'm not the guy I'm not going to act like I know it all. And I don't want you to think that I know it all. But what I'm saying is there are incorrect ways to trade and there are correct ways to trade, okay? You and I can both agree that we do not want our goldfish picking our stocks, okay? That's a bad way to do it. We can agree on that. So if that's it, so if there is certain ways that are not correct ways to trade allow me to say this. Okay? And don't pull the card that's like, well, anyone can make it work as long as it works for them. That's the BS scapegoat that I hear everyone in the trading industry say to sell their course or justify why they're still losing in the markets. Okay? That's just my honest opinion. You can take it how it is. I'll say this. You have to find a trade idea outside the price charts. Price charts. Every day, there are thousands of head and shoulders, thousands of cup and handles, thousands of different setups that pattern traders love. There are thousands of different setups I love. But how do you justify which one is going to actually move? Because majority of them actually don't. You have to find an idea outside the price charts first, okay? Now, this relates to entries, management, and exits because that's important. Because for you even to get to a chart, you have to have an idea. So when you see me scan the flow, when you see me come up with an idea from the RRG charts or comparing the major indices, that is all ideas outside the price charts, all right? So building an idea outside the price charts validates that when you do say, oh, you know what, rate-sensitive stocks are going to be bullish. Rate-sensitive stocks are going to be the ones that are the winners. That means that now when you go to rate-sensitive stocks, when you do see a bullish setup, that justifies why that stock, why you should take that stock, right? So when we saw option flow in RDDT or we saw option flow in Boeing, that justifies why Boeing has a decent setup. So then I can look at the price charts, okay? But if I'm just going through typing in my favorite tickers, you know, blah, 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 and I'm just staring at candles, it doesn't matter. You have no ability to time the markets. It does not matter. That is not a good way to trade. Does that make sense to everyone? Build a narrative as Papa says. Okay, so number one, Kuwani, I am not Papa. Number two?
You're Papa. Bye.
All right. So we're going to hit him with the...
Oh, hell no.
Okay. Okay. All right. So that's that. Okay, now moving specifically on to enter and exit so I can wrap this lesson up a little bit. I mean, it's only a quick one. But as far as entries, this is what I tend to do. There's two ways that I typically enter a stock, okay? If it's a stock that I have a lot more time on, okay, what I like to do, so lot of time. This could be anywhere from 1 to 2 weeks, okay? If there's a stock with a lot of time, what I like to do is my entry is 1/3 of position size dedicated. First entry is 1/3 of the position size. Now, the reason I enter, so when I go and I enter a trade, I say, okay, I like this setup. I go and I enter with 1/3 of my position size to enter. So let's say I wanted to dedicate, you know, typical position, maybe 3K, okay? It's typical. If I wanted to dedicate 1/3 of my, what I would be willing to trade on this, I would say 1K is my initial entry, okay? And what that does is when I enter, I'm entering with less position size, so my losses are smaller, but this is the key, is that I'm waiting for the stock to move in my favor, okay? So I'll give you an example. So we're going to come back to SPY. I need to remember that it's on SPY, okay? So CAT, for example. CAT, since I deleted it, my chart's not on here, but this was my trade idea on CAT. So this was monthly, Raider Trader password leaked. Okay. So this was my trade on CAT. Here was my chart, okay? So right here, I entered with 1/3 of my position size on this golden zone, okay? Now, as I entered I entered this right on this candle. It was just into July, okay? So I entered right here on this candle, and that would have been like right here. So this is the candle I entered on. I did not add until I saw a gap up over this zone here, okay? So I grabbed the 7/19 contracts, okay? So I did not add to this trade until I had a gap up over this zone. And that didn't come till all the way right here, because by entering with a small size initially, I'm saying, let me take a small stab at it, and then as it proves me correct, what I'm going to do is I'm going to add very aggressively to this, because I only want to add to stocks that prove me correct, not stocks that prove me wrong. And so that leads me to my next point, which is never average down. I see too many freaking traders do this, man. Never average down. Okay, when you first enter a stock, never, ever, ever average down. Okay, it's a horrible idea. Why are you... Okay, this is like me and... let's take Abstract, for example. Okay, so Abstract in chat, he had recently broken up with his girlfriend. His girlfriend really liked me. Okay, and she wanted to come see my bullish candle. Okay, so when she wanted to come see my bullish candle, why is he still investing time with her if she continues to show that she does not show loyalty to him? Okay, so the idea behind this is if a stock is not proving you correct, why are you adding to it? Think about it. Think about that logical lapse in your head of why you were averaging down. Now, it's different with equity, because equity is fundamental analysis, and you're seeing fundamentals, and they're staying the same while the equity price is not. Okay, so that's the long-term mofos like Warren Buffett and why they add down. But for options, that's not true. Okay. So never average down, okay? So that's my first entry, okay? Now, what I will do typically with those longer dated trades is as it works out in my favor. So in the example of CAT, I added at the first target. So I actually added at the first target because once it hits the first target, it's more than likely to go hit the second target. The closer you get to targets, the more likely it is to touch that liquidity zone, assuming you made the target's liquidity zones. Okay, so this target 1 was where I added aggressively. Once I did that, got up to full position size, then you get into your management section over here. Okay, now the other way for day trades, I would just say this. Small time, maybe 1 to 6 days. I'll just flat out enter with my dedicated position size. Enter with dedicated position size. So again, if it's a smaller trade, I'm not likely to throw 3K at it. Like if it's just 1 or 2 days, it might be a $1,500 trade for me. It might be, 2K, but it's not going to be necessarily a 3K like swing trades are for me, or more even. So that's that. So with this, smaller time, maybe enter with just dedicated. Okay, so never average down. All right, so going on to the man. Are we all clear with this? So how bullish is his candle? All right, mods, we need to just do a massive band wave here. That long-legged doji. Okay, so mods,
what is this chat?
So we need desperately a counsel. We need a counselor mod. We need counseling scheduled. We need it on the schedule, on the calendar. Please schedule these people counseling. Bro gonna get hit with a defamation lawsuit. I'm about to leak your OnlyFans. Okay, so I don't have OnlyFans. Whoever says I have OnlyFans, ban them in chat, please. Okay, but that's anyway. So, I mean, if you guys want to see a liquidation, let me tell you. I mean, whoa, wait a minute. Pause.
Oh, hell no, man. What the fuck?
Okay.
Okay, so are we all good with the entry stuff? Do you guys have any questions? Any questions at all right before we move on to the management? The management's actually pretty easy. Okay. Bro, ban yourself. Okay. So, guys, right here, this is the remaining part. So, management is pretty damn easy, okay? And we're just going to make this screen a little smaller so I fit everything. So right here, okay. So whenever the management part is super easy. So when I entered this trade on Cat, by the way, this was 1,000% trade. Flex on him a little bit. But this was on the rate report. This Cat trade right here, when it hits my first and second target, okay, now I added at my first target, I was all good. When it hits your targets, when it hits liquidity zones, this is what you need to ask yourself. Number one, what is the momentum of the trend? If it's super strong, that has a big influence in your decision making. If it's super weak, right, it's chopping up, it's grinding, it looks like this, right? If it looks like this into your liquidity zone versus this, these have two different decisions behind them. You also need to ask, how close is expiration, right? If I got 719 and it's 717, 2 days to expiration, and it's slowing down on a major liquidity zone, I probably should at least trim, right? I probably should sell majority of my position, because not only do I only have 2 days left, which means that if I see any sort of big move against me, that theta is going to clap my cheeks. It's going to absolutely brutalize me, right? Because again, closer you get to expiration, the harder it is to see gains if you have not moved in a significant manner. Okay, and the final question I ask is, will my trade change if it moves against me? If I'm break even, I got 2 days left on expiration, momentum is coming into a zone and slowing down, just get out, right? If it goes against me and I'm going to go red and I'm green right now, and it looks like that this trade is going to take a miracle to work out, ask yourself, is it going to take a miracle? How much is it actually going to take to work out? If it's a lot, get out. Go find something easier. Okay, does that make sense? Those are the three most important questions you need to ask. Now, specifically with this Cat trade, when it came into my first target, which was around right here, which was around 340.60, the momentum was still incredibly strong. So, my bad. Not accidentally, but I actually did hold this, and I continued to hold it until it slowed down, which was, I'm still holding majority of my position size, but I did sell some towards the close. Okay, so that's what you need to be asking with your management. Okay, you always need to be willing to trim, but I like to add during my position. So as I get proven correct, I add into target 1, target 2, and then if it exceeds that, I'm going to start trimming anytime price action slows down. If it doesn't slow down, I'm not trimming. You do not sell on strength, you sell on weakness. You do not sell on strength, you sell on weakness. I'm going to say it one more time. You do not sell on strength, you sell on weakness. When price action slows down, that's when you sell. Even if you lose a few extra percentage points on your gains, man, it dropped against me. I could have sold for 25% more. Who cares? It's the fact that you held for something bigger. You held for that opportunity. That is what you need to do. Okay? A lot of you guys wonder why you sell and instantly after your stock rockets is because you sell on strength, not weakness. Okay? Question, how does theta affect the intraday? I have a trade last Friday that was seemingly decaying. The price action was chopping its way up. The call price was essentially flat. So depending on what contract you get. So same days, I never encourage people to trade same days because same days clap your cheeks. So again, theta decay kicks in heavily more towards the end of the day. Obviously, the closer you get to the end of the day, if it's the same day, the more it claps you. Theta will only play a part again if your option doesn't move. If the contract is moving, you don't have to worry about it. It's not going to be that much. But as you get closer to expirations, and this is why it's so important to consider these three questions, is because of theta decay. In that, if you're too close to expiration and the stock is still not moving, it's still not, the idea is, it's not there, just get out. Sell majority of the position, get out, because that is not worth it to pray for a miracle that it's going to move a day in advance or a day before expiration to make you profitable. Okay? That's the idea. it was a day of expiration. Yeah, so I typically don't do it because, so let me give you a little demonstration here. So if you're looking at my screen, the options works like this, okay? Whenever an option, let's say you bought an option here. If the stock goes up and then comes back down, the option is not going to be worth the same price, even though it's at the same level. Okay? So that kind of principle is why options are so hard but so rewarding at the same time, because if you can time the markets better, you get paid more. But the reason I tell people not to trade same days is even as the markets go up, right? So if you trade, let's say this is the same day, and then let's say this is one day out, okay? As soon as this market starts to drop on the same day, you're going to lose like 50, 60% of your contract, and it might even be worth less, even though it's higher than the price when you bought it. That's why I just don't tell people, because the next day expirations, they don't do that. That's not. So I always encourage that do not do same days. It's not worth it. Okay. Especially if you're not in the money. But yeah, Greeks. I know the Greeks. Abstract was a witness to the Greeks master the other day in chat. He knows his name, the Greeks master. He probably remembers who I'm talking about. But okay, anyway, so that's that. So these are the 3 questions. Now, exiting is very simple, guys. There's 2 types of trading. There's trim. Well, we'll just do this. Trim trading. Okay, you're trimming as you get out. You leave a runner. You leave runners. So long as that runner is free / doesn't impact the severity of your trade. So let me give an example, okay? My gold trade was the biggest trade of the year for me, okay? Now I'm not going to go back, and you can watch the videos on that. The gold trade was the biggest trade of the year for me, okay? The option flow, put spammers, same, they came in, we timed it perfectly, we got a beautiful expiration, 1,500%, okay? Not only was it one of the biggest percent-wise, but also the dollar amount, I added like madman. I had like a third of my portfolio in that bitch. So with the gold trade, that was my biggest trade of the year. So when I leave a runner, and what I mean by leave runners, so long as the runner is free, so that even if you lose 100%, it doesn't affect, you're still green, but also doesn't impact the severity of your trade. So what I mean by this is this. Let's say you have 2 contracts or 3 contracts, and you sell 2 of those contracts, but the 3rd contract takes your trade, if you were to lose 100% on that, takes it from your biggest trade of the day that makes up for all your losses to now just a mid-sized trade and ends you right on the day. Do not let that runner go. Sell it immediately. If your trade that you're in, if you were to leave that runner and it were to go to 0, and it were to impact that trade to be your biggest trade of the quarter down to the 2nd biggest or the 3rd or 4th biggest of the quarter, sell the runner. You need to leverage your winners. Do not let the runner stop you. If for example, for my gold trade, I was able to leave runners because I was up so bloody much that even when I sold majority of my contracts, even if those contracts went to 0, it would have still been my biggest trade of the quarter, still made my account gargantuanly more big compared to all the losses I had that month. Okay, so that's what I mean by severity. Is everyone clear on that? Does that make sense? Bro's talking about the guy yapping about physics was affecting the market. Some people, man, I can't. Bro said, "Do you know physics?" What was the gain on the gold trade percentage-wise? 1,500%. Is keeping wrong trade for long? I think it was on the radar report. The balls of me to make it on the radar report is crazy. I think I made it the trade of the week too, which is hilarious. Is keeping the wrong trade bad? It's better to take a small loss on a trade that didn't work out in time. Remember, timing is most important. If you were like, hey, I want to bounce today for FOMC, and FOMC comes out, and you're still in this trade that's not moving, get the hell out. There's no point if the idea was not timed properly. Get out if the idea changes. Okay, so let me see this real quick. Wait, where was... I think it was March 17th, no? No, it was February. No way. The first Raider report had my biggest trade of the year. That's crazy. All right, so here's my gold trade. Okay, trade of the week. Look at this. The balls on this guy. So this isn't the only order, but these put spammers came in. They built a massive support level for gold, and this 187.5. If Jason's still in here, this is the power of option flow. This one guy started spamming the 187.5s back here. He single-handedly. Sorry, I know my chart zoomed in. 1 second. So this put spammer right here, this is not the only orders. I repeat, this is not the only orders he placed. There was like 20, 40 more. This guy, all the orders he placed, he spammed so much that he created the 187.5. He got the 187.5 for 315. He spammed the hell out of this. I think he put like 5 million, 4 million on puts on the 187.5. He single-handedly created the all-time high push that triggered the reaction of the markets to go to all-time highs for gold. Now I got 315, 1,500% for my 328s as well. Or the 29s, whatever it was. Ay. Does that make sense? Bro's own Discord is dissing him. So when the poll ending? Oh, right. What are your views on the crypto market? The Discord got freaky Raider picks. Okay, so... but that's that. Okay, in the final lesson, guys, just so I can go to Waffle House because I'm starving. Oh, God, I have to go start my car. You guys know that when I go take my Mustang out, it's so damn loud on startup. I worry that someone's going to call the police on me. It's outrageous. Okay, as far as this, that's so basically with trimming, if you understand that principle, that ask yourself this, and this takes a lot of thought. Remember, guys, great traders are made in management. What separates an ass trader from a good trader is not necessarily what they know, but more importantly, how they manage their trades. If they're good at managing trades, they can take 100 losses and still be profitable because their winners are going to be so big. Okay, so with this, understand that management is all that matters. It's like truly what separates great from good. Okay. So if you're in a position, you trade one contract, two contract, don't leave runners. Just sell half and then sell the other half. Don't worry about leaving runners. Just take the big winners, hold longer, and only sell. This is important. Only sell when the trade idea changes or is jeopardized. Okay, so let me give you an example. If you're trading a swing trade, and make sure you guys screenshot this. If you're trading a swing trade and it's coming into earnings, you're 2 days before earnings, you're up a lot, and the earnings could impact your trade, you need to sell. It's kind of obvious, right? But it's also less obvious on a technical standpoint that let's say you buy a put trade and you're entered in the put trade. Well, then the stock starts to break up to the upside. If it gaps above the high and it starts to pump, that changes the trade idea, right? You're wrong. It's actually breaking out. So sell the damn trade. The idea broke down. You need to identify, and that's a skill, identifying where on a chart that the idea would break down or be jeopardized. Okay, just because your contracts are down, now listen to this. This is big piece of advice. Get the notebook out. Just because your contract is down does not mean sell. My biggest trades of my lifetime have been from 60% down on my contracts. But I didn't sell because the idea didn't change. If a stock does this, my contracts would be down. That does not change the idea of the breakout trade. Okay? So don't trade your contracts. Trade the markets. Identify where that market might break down. Maybe the idea breaks down when it gaps below this point down here. Okay, there you go. Maybe it doesn't break down if it just crosses, because that would be a liquidation and I'm down to hold. Or maybe I do sell on the cross here and I look to get back in on the liquidation. And in that case, if I'm going to do that, and I think that's a possibility, then enter with 1/3 size here to reduce the risk of your liquidation, or enter 1/3 size here to confirm, let it confirm that it's a liquidation. Do you guys see this? This is where management is so big. This is where you're going to make a lot of money as a trader, is management. Having the intelligence to know when and where to place your money and how to do it. All right. All right, let me catch up on chat here. Do you buy the same week expiration as the flow or add a week? Oh, what's up, Keith? You typically buy more time, but sometimes you follow the same idea. You don't always add more time. Because sometimes, like a hedge order for 719, they're hedging for 719, so why would you get necessarily a week more? It's not always the case. Chris stocks, chip stocks were not strong today, but Intel is never strong. And it was strong today. It is because 2 weeks before earnings, and it has been rejecting 35. So INTC had a hedged flow order the other day. It's keeping it alive, but this name is definitely stronger into earnings, especially 2 weeks before earnings. You typically get a run up, so within the next week you should see a continuation in Intel along with semiconductors. Again, semiconductors long, I'm looking at ARM and Intel. ARM and Intel, these two names I think could be big. Today Starbucks gapped down $1, then went $4 up. Why did that happen? So that was the liquidation on Starbucks. So you can see it made the new low. So we were just talking about how every bottom has two bottoms. It has the technical bottom and the liquidation. The liquidation is where you had, you could say this was the technical bottom and this is liquidation of this trend. But this right here is the liquidation. Classic. Gap down, come up, and now you can expect a continuation of some sorts. But again, I would be careful with this one. You can expect a contraction tomorrow. Inside day, maybe, who knows? But I'm expecting some sort of contraction in these rate sensitive names, discretionary names, and then get a continuation later in the week or next week. I think that's where the most opportunity is, given that they've all moved so much. Do you have, sorry, my chart's like not full size here. I'll answer a few more questions. Do you have a specific entry level on ARM or the punch long? Yeah, so as far as ARM goes, with ARM, all I'm looking for is any gap. If you can gap into or above 179.52, I'll take that long. 179.52. It needs to be a gap. It needs to be an after hours gap, or I'm not taking it. Okay. But the alternative scenario is that they actually liquidate this first. In that case, you would see it drop down, and then I would either look at 168.63 or 171.52. One of these two levels. 171.52 or 168.53 on a liquidation. Again, judging the momentum of how hard it's selling off for the liquidation. But the idea is gap into here, play that. Again, there's a hedge on SMH, huge order. So it is buy the dip trade, or it's going to be bet against instantly and see it move now. Can you check Penn? Yeah, I saw that one the other day. I don't think Penn is that great, to be honest. It's chopping. There's no reason for it to move into earnings. So this is weak. I wouldn't think of much of it. How do you determine your trade targets? They're just liquidity levels. So let's say I want to long this. This is a shot gap, so my first target would be this. It's that simple. Maybe second target would be that. Maybe first target would be this right here, which is a liquidity level. Again, depending on the time frame of the trade, you could say this is a target. So that's how I determine their liquidity levels. Thanks. I'll be an R and Apple subcontractor. Awesome, man. That's cool. All right, guys. Well, that does it for tonight's stream. Now, you guys, a lot of you guys are actually in the Discord already who are watching. Thank you so much for being here. I'm going to have a YouTube video coming out later tonight. If you do want to watch that, it's going to be over a lot of these trades, more organized, just to keep you up to speed. So go watch that. Once I post that, even tomorrow morning before work or something, make sure you're fresh on these trade ideas. I also put some in there that I didn't mention here, which you should go check. But with that being said, guys, definitely, if you do want to sign up for the Raid Report as well, it's only $50 a month. You get a seasonal tool. You get a lot of different stuff coming up. You get the Zoom meetings. You get my bad. So you get the seasonal tool. This is Season AX. I pay like $120 a month for this. We put it on there for free, included with the Pro. You get the charts. You can see my daily update. Now, if you want to just sign up for free, it's free to make an account with the Raider Report. You can see my SPY chart for free. I update this every week, every day. And so you can see my levels and check to see with your own, see how your charting compares to mine. And I'd like to say most of my charting is 99% accurate. So you can get a good baseline off of mine. But that's that. Also, if you guys do want to get more involved, of course, these little goons that are in the chat, that I'm talking to right now, they are also in the Discord. We have a pretty big damn community. It's very private. It's very academic. If you want to see my mentors, if you want to be around my mentors, if you want to be around professionals, we have doctors, lawyers, people of high IQ that really love trading for the heck of trading, not to flex profits, not to do any of this crap that the industry promotes. You guys might have seen my story earlier today. I am so sick of this idea that trading is simple. It is not simple. It is very complex. It is hard and it is difficult. But once you understand that and you start to work through it and you get this idea of I need to trade to make $1 million in a year out of your head, you will see that that is actually what pays off in trading. And yeah, so you guys can sign up for that if you want. If you want a discount trade and if you want a discount code and you're actually serious about joining, I can give you 50% off. Just DM me on Instagram, say you're serious. Don't waste my time if you're not going to join, but if you want to, I can give you that code just so I don't make price a barrier to you joining. Okay. So with that being said, I'm going to drive my really loud Mustang at midnight down the road with AWE exhaust, supercharger, long tube headers. I'm and I'm going to go terrorize the local neighborhood kids sleeping. Okay. Freaky bot. So Kuani, how did the word freaky come up? I'm a senior Python developer. Let me know if you want any help with bots. Awesome, Unique. Definitely stick around, man. I might need your help sometime in the future. I got a Chegg bot for students for free. That's actually hilarious. Dude, I literally use Chegg. I do online classes at the University of Cincinnati. So I've been like a Chegg warrior these last few years. Like, allegedly. That's a lie that I use Chegg just so they don't cancel my graduation. But I should graduate this year, like December maybe. But of course I'm not going to it since I'm doing online school. But rev that shit. Wow. Thank you guys. But anyway, have a great night, guys. Thank you so much. Stay locked in. Ask me questions on social media. I love talking with you guys about it. Engage, share, show up to the streams. You'll do wonderful. You'll learn a lot. Other than that, guys, have a